Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Monday. Stock market's back open. Before we get started, I just want to let you know this is the only video that I'll get out this week. I'm actually going back to Nebraska to help my mom celebrate her 99th birthday. But let's get started here with the stock market. Stock market's down a little today. Dow down about 100. NASDAQ down about 200. What did I do today? Well, I've been in all cash, as you know, but today I actually put a short position on. I put a short position on in the SPY. Now, why did I do that? Well, there's several reasons. Right now, we got the 50-day, and it's slanting downward, okay? And the SPY is starting to get up towards the 50-day moving average. But we have the 200-week moving average, which is sloping upward, and that's where I think we're going to drop down to. That's my opinion. Now, there's a lot of reasons for this, okay? You got a gap to fill. When we hit the bottom back in June, we gapped up, and we have not gone back and filled that gap yet. I think we're going to come back down and retest June lows before we get that big short covering rally. Now, we're up, 7% off that June low, so we'll probably come back down 7%, maybe even take out that low and go a little bit lower, 8, 9, or 10% from here. And we got earnings coming. Now, another reason I like the short side of the market, if you take a look at the VIX, the VIX, you pull up their options, okay? Now, the VIX is a professional trading tool. Most retail investors don't even know what the VIX is. It's a volatility index. Usually when the VIX goes up, the market goes down. Well, they're paying twice as much, 100% more, to buy a call right now than they are to buy the same equivalent put. 100% more. Professional traders think that volatility is going to go up and that the market's going to come down. This is another reason why I believe we're going to come down to that 200-week moving average on the SPY. We'll see how that all plays out, but that's what I'm doing, a very small short position on the SPY for me. All right, so let's get into the housing market. Now, housing market is always fascinating to me. What's fascinating is what the professionals think. Now, Redfin, they came out with an article and basically said that, sellers have missed the top. You've missed it, right? Billy Bob, now Billy Bob sold back in February. He got out at the top. You can no longer get Billy Bob's money. Now, let me show you what real estate agents do. Now, this is just in my area. I'm sure in your area it's a little bit different. Now, in my area, houses are very pricey. Now, I'm going to show you this here. Now, okay, what they used to do, they would list the house below what it was worth and then let people kind of bid on it. So that listed at $3 million, let's say, and it would sell for $3.6 million. They'd list it at $1 million, it'd sell for $1.7 million. They'd list it at $1 million, sell for $1.4 million. They list it, at $1 million, it goes for $1.9 million. And then what happens is the agent can then send out flyers, just like the one I showed you. She can send out the flyers and she can look like she's a god. She's a real estate god because she can get you so much more above the asking price. Now, is she a real estate god? No, she's not. But what she does is she prices the house very low. And what this does, it brings the herd of buyers in thinking they can get a house for $1 million in Cupertino or Sunnyvale or San Jose. You cannot buy a house for $1 million. So everybody comes and they go, oh, look, it's listed at $1 million, but they bid it up to $1.7 million. And then she goes, I'm a genius. Look, I sold it for $700,000 over the asking price. And then to her clients, maybe that looks good, but here's the problem with that. Now, when I have a client and I go show one of her houses, my client says, Mike, it's listed at $1 million. Let's offer a little over. Let's offer $1.1 million. Now, I have to educate my client. No, that's not going to get it done. You need to come up to $1.7 million. They're going, what? Why would we offer $700,000 above the asking price? I go, because the asking price is not really an asking price. It's an auction, really, and that's where the first bid is at, and they know that it's going to go much higher. So there's a big education process for me with the buyers. Now, what's changed, though, in the real estate market is this is probably not a a system that's going to work anymore. You list a house for $1 million, you may not get it bid up. You may only get one buyer, and that buyer may come in at $900,000. And then you have a lot of explaining to do to your client why you thought that you just sold their $1.5 million property for $900,000. Now, of course, the client doesn't have to accept that offer, but my point is that these massive offers, these massive run-ups in the bidding wars, they're not happening anymore. The market has changed. The market has changed. Now, here's what and this isn't me just saying, this is what Redfin says. Redfin says that you've missed the top. You've missed the price that Billy Bob got out at. Now, here's what they're saying. That you should, now they say if you didn't get out and you're discouraged that you missed what Billy Bob got out, you're not going to be happy if you don't get what Billy Bob got. But what they're telling you to do is to put your house on the market anyways, because a year from now, they're going to be much cheaper. This is Redfin, and they say it's going to be bad for their business that houses are going to be cheaper. They have, when you get the professionals like Redfin who have a vested interest in the market saying the market's going to be lower a year from now, you know we have big problems in the real estate market. Okay, but here's what they're saying. They're saying that if you put your house on the market right now, don't put it on at the market value. List it below the market value so that you can actually find a buyer. Because you put it at market value, there's really no buyers at market right now. The buyers, well, they've got exhausted. They just given up. They've gone on strike. They've gone away. So you have to list the house a little below market so that you can find a buyer. Now, here's the thing. Here's where Billy Bob got out at. And they're not saying a little below where Billy Bob got out at, because it's already come down from where Billy Bob sold that, right? So it's already down here, but that's where the market is. They're saying to list it down below the market, okay? So you got to come not just below Billy Bob, you got to come below the market. So it's kind of two steps already that you've missed out if you're a seller. Now, sellers are starting to panic with this, right? They're going, oh my goodness, I missed the high. That Billy Bob guy, he was smart. He sold in February, but this is July. I want to sell now. Well, you still should sell according to Redfin, because a year from now, they're going to be a lot lower. Now, what's happening in my area? This is fascinating to me. I haven't seen this in quite a while. Okay, so the typical rate to sell a house in my area, about 5%, and 2.5% goes to the buying agent, 2.5% to the selling agent. All right, well, a lot of agents already raise that back to 3% for if you bring them a buyer, they'll give you 3%. And here's the other thing. On top of that 3%, they'll give you a bonus, $10,000, $20,000, $30,000 bonus if you can just please bring me a buyer, because they don't have a buyer and they looking bad to their clients. Look at when houses are going like this and you can just throw them on the marketplace and just, put a list price up here at $4 million and sells for 4.6, you look like a hero. But when you put it up at, even $2 million and you get no buyers, you don't look like that hero anymore. It's easy to sell houses when they're going like this. It's not so easy when they go like this. You know what happens to a lot of the real estate agents? Well, they go away. Now, I kind of like that. It gets rid of my competition in the down market, because that's what I do for a living. I sell real estate. Now, that's pretty much what I just wanted to cover today in that part of the market. Now, what's one part of real estate that is going to continue to go higher? And if you're an investor, you should be investing in this type of real estate. It's called old folks homes. Now, my mom's turning 99 on Wednesday. She's turning 99. I'm going to be back in Nebraska. I'm going to be hanging out in an old folks home. Now, these old folks homes, they're not cheap. Now, my mom comes from Nebraska. She has tons and tons of relatives there, so they all come and visit her. Now, out here, she just had me. But anyways, we looked at old folks homes out here. And these retirement homes for old people, well, they were very pricey, very pricey. Out here in California, where I live, we looked at them, and for a studio, a little studio, it was basically over $5,000, about $5,500 a month for a studio. Now, what you get with that is you do get your meals. You get to go up to the dining room and you get to eat with the other old people there in the dining room. Or if you're not feeling well, they'll bring the meals into to your room, and that's great. And you get maid service. The maids come in once a week to clean your apartment, and that's basically all you really get. Now, there is a doctor on call or a nurse on call if you get sick, and you have a button you can push and you'll get assistance. So they do have some other amenities, but these homes are very pricey. Look at, for the 2-bedroom version of this $5,500 studio, it was almost $8,000, right? So my mom is from Lincoln, Nebraska, so that's where she wanted to go to the old folks home at, so we moved her to Lincoln, Nebraska. Now in Lincoln, Nebraska, she has a 2-bedroom luxury apartment on the 6th floor that overlooks the city of Lincoln, Nebraska. Not too much to look at. I guess if you're a football fan, Nebraska University is there, and they hold a lot of big football games there. But overall, there's not a whole lot there. I think old folks home is probably the leading industry there. But anyways, the price she pays there is about $2,700 for the same equivalent that out here in the Bay Area would cost $8,000. So mom is back there, and I'm going to go back there and celebrate her 99th birthday. But these old folks homes, there is a lot of money in these homes. Now, a lot of these homes, they have buy-ins. You have to actually pay to get into the home. You don't own the home. You just pay to get in, and some of these fees can be $50,000, $100,000, $200,000 just to get into the home. That's kind of like a membership, think of it. Now, you do get part of that back after my mom passes away. They give me half the money back that you put down on these homes. So that's basically how these old folks homes work, but these are valuable. You should see where my mom lives. This is in Lincoln, Nebraska. There's not that many people there, but there are 6 towers already, and they're building 2 more towers right now because they are full. They can't. This is a booming business because all of us baby boomers are going to be moving into these old folks homes, and the price of these homes are just going to keep going up and up and up. So that's one part of real estate I do believe investing in. Now, the housing market in general, not so much. Now, don't think I'm down on real estate. I love real estate, but right now is a very dangerous time to invest in a house right now. It just is. It's dangerous because it's so far above the mean where it needs to pull back to, and that pullback could be as much as 50% off. So anyways, I hope you enjoyed this today. I'm going to be gone the rest of the week, but give me the thumbs up anyways for the effort, and hit that subscribe button so we can talk again next Monday. Get out there. Have a great week, everybody. I'm really going to miss you guys. Anyways, get out there. Have a great week. We'll talk again on next Monday. Bye-bye now.